Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on January the 9th with a little Forex market, net market for the week of January 11th through the 15th coming up. So before we get into it, I just want to pull up our disclaimer real quick to remind you that this is for illustrative and educational purposes only. And also, before, if you haven't already done so, subscribe to our YouTube channel, Forex Trading Unlocked. And also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. We're actually going to start off here at the Forex-Trading-Unlocked.com website. We have the workstation page pulled up already. And we have the Euro US dollar. It ended the week on our note. The dollar actually got a little bit of a bounce Thursday into Friday's trading. Right now we have a bearish engulfing line sell signal that was triggered on Thursday. And we had a nice little follow-through break that happened on Friday. As you can see, the short-term trend is very vertical from the beginning of November to the beginning of January. We went from $1.16 all the way up to over $1.23 in the Euro US dollar currency cross. And it's quite the move. You're having a $7 range in just 2 months. That's very, very, very extreme. So, and what we have now is we had a higher move high that was set a few sessions ago, and then on Friday we made a lower move low. So we have the sell signal from Thursday. Friday we made this lower move low. Now we didn't settle below $1.2215, so this can be our big directional pivot with $1.1974 down to $1.1882 as our target band to the downside. So right now we have a little bit of a spark of bullishness. Now remember, every time this market's pulled back a little bit off its highs, it grinds its way higher. So this market isn't a bull market. It's been overall making higher move highs and higher move lows. This is kind of an intraday thing, so we'll see how this carries through. If we continue to get follow through and especially get below this like $21.20 to $21.75 area, another sell-off like we had on Thursday and Friday, if we get that on Monday and into Tuesday, then that's probably a good indication that, well, besides a short-term turn, we have a good chance at pushing a nice size correction down towards this $1.18 level. Remember, it seems like a big move because, I mean, the Euro US dollar was trapped in a $5 range for over a year and a half. Now, with the advent of 2020, this thing's been swinging all over the place, and I think that this is just a sign of things to come. We could be getting set up for some other major trends, obviously, in the currencies this year. We have to wait for the U.S. inauguration and everything to get through in January, towards the end of January. Plus, we have to see how the lockdown measures in the UK and the EU are going to impact the economies over there, because it seems like it's starting to finally hit those things. All right, now let's look at the British pound US dollar. So we had a sell signal in the Euro US dollar on Thursday. The British pound started trading lower already a week ago. This one has been grinding lower. It's been a major bull versus the dollar for months now. The overall trend is not as severe as the euro. However, it's still pretty wide range. I mean, we have an upside breakout level of $1.3703. Back above here, we have higher move highs confirming the trend. As far as buying into the slide right now, I would wait for a valid signal because it looks like we are grinding this correction lower. But as you can see, this market, it'll spike down and it flies right back. So I don't know if the dollar has really turned yet. Once again, we have to see how things happen with the lockdown measures in the UK and also in the EU. And remember, I know that the Scottish issue with the UK is pretty much brushed under the rug, and I think it is pretty much that kind of a matter as well. But as long as it is still newsworthy, it's probably a little tension on the pound. And also, I think the argument's ridiculous because I don't see how Scotland would be able to maintain itself without the UK as a source of resources, for one, especially financial ones. So right now we're a little bit bearish on this one in the short run, especially on the hourly, in the short term, a couple days going into the new trading week. We'll see what happens. I think that if the Euro US dollar continues its plunge, and if the dollar continues to maintain strength versus most other currencies, which, remember, the dollar's been beaten down for so long now that we're going to have bounces. So right now, we may be in one of the, and there's only been a 2-day bounce. In this case with the pound, it's been a 5-day bounce. But even still, it's grinding. It's holding, and it's trying to hold this support here. So is it going to flip back to the upside? We don't know. We'll see. We're waiting for a signal here. So let's look at the U.S. dollar Swiss. Let's look at our flight to quality currency and see what's going on here. Well, interestingly enough, the dollar has had a nice rally versus the Swiss over the last 2 sessions, which ironically, because of the euro move, it's not typically where you're going to have an opposite reaction. That would be ironic if you had an opposite reaction in the Swiss. So this is kind of coinciding with the euro, as well as the little bit of heat that the pound is taking as well. So is this a bullish sign for the Swiss, US dollar Swiss? Probably not. I would say that even if we have strength in the dollar versus the euro and the pound, don't expect that much out of this one. This is pretty beaten up. I would be surprised if you see this thing making a run for parity anytime soon. But even though this isn't a big downtrend, it's not in that steep of a downtrend. And just by time and attrition, I could see us get back. If we take out this 189.20 level here, that would be a nice sign of neutral potential, where I would say that we could probably push a higher range back up to this 90 to 91 cent area, and then start to bobble down between 91 cents and 87 cents as the dollar and the Swiss probably will find some sort of stable range, I would say, in the first couple months of the year to see how the transition of power in the United States goes, as well as the fact that we have transition of all kinds of stuff in the EU and the UK. Now let's look at the other flight to quality currency on the other side of the pond, on the other pond. We have the U.S. dollar Japanese yen, which has had a nice little follow-through move to the upside. This one started already back on Wednesday. And interestingly enough, on Wednesday when the market was railing, it was pretty strong. And you see typically a divergence when the dollar is not in play, meaning that, say that the euro and the pound are going up versus the dollar on any given day. At that point, typically, if they're not really a dollar-related move, the U.S. dollar yen will go the opposite way. Doesn't mean that it's going to trend overall, but typically on the day, if you have a weak dollar versus many currencies, you'll see the dollar rally versus the yen. And conversely, if you see a dollar rally versus other currencies like the euro and the pound and the Swiss, then typically you'll see the U.S. dollar actually go down versus the yen. It's just a fundamental reaction of how these currencies will move when they're not, like I said, not being dollar driven. Now, when it's a dollar driven trade, obviously then that's a totally different story. I mean, you can see that the U.S. dollar yen has been in a bearish trend for months now with the yen as well. It wasn't that long ago that the dollar was very strong versus the yen. Right now, not so. So, and that's something that we'll have to watch for the next couple months, and I think it'll be interesting to see if we're stabilizing the yen now and the dollar relationship. I think you're going to have to really key off of gold. Also, interest rates at 30-year and 10-year notes, watch them. They've started to kick up their heels the last 2 sessions. It's very important. Remember, interest rates are a function of currencies. The 30-year bond is in play right now. Excuse me. That is a very, very big deal. So the 30-year, no matter what, sets the tone for interest rates all across the board, all across the globe as well. And that has to deal with it with the currency pricing. So if we have rising yields and rising bond prices, that's going to definitely impact the dollar. And that could be why you're seeing the spike in the dollar right now, is that because the market is dictating much higher rates on the U.S. dollar, is a reason to all of a sudden have money in dollars because of the interest rate. So it's a carry trade thing. All right, let's see. We got Jericho here on the mic here. Hi, GBT short the next 2 weeks. Any thoughts? Okay, Jericho, this one here is for you. We're going to look at the pound Swiss. So we looked at the pound dollar. Let's really go back to review that real quick so we can see The pound is weakening versus the dollar. So now if the dollar is gaining strength on the Swiss, then I would say that the British pound Swiss should be going lower. Just my, let's see. We've had the last two sessions, yeah, a little spike there. Looks like a kind of a neutral trade. Now here's the thing is the Swiss, because the dollar has been in play, that's why there's such a major trend. The Swiss versus the pound. Here's the thing is the Brexit doesn't really impact very much with Switzerland. Okay, even being part of the EU, it's still kind of irrelevant because of their own currency. So I think that's why. I mean, if you look at over the course of December, you've had a decent range in this one in this market, but you found a nice bottom here in the middle of December. Since then, you've been making higher move highs and higher move lows off of this low. However, you haven't taken out this high here. So let's see. You want to know short on the H2 out next week. Okay, so let's see. We'll put this level right here. This is going to be our key upside breakout level as far as risk. If you're short, I don't know how long you've been short, if you're short around the close or whatever, but I would say anything above 21.24, you're definitely going to be on the wrong side. Cautious with that one because you have these highs up. You take this high out here, you're looking at a confirmation on the short run over a few weeks that the trend is definitely bullish with momentum looking to breach resistance and continue higher. So then 122 and taking out these highs becomes very likely. But you want to see where to go maybe on this trade. Let's say you're short from the close. So here's your risk level. I would say minimally, and this will be a good support area, would be the 50% level. There we go. Right around there. And then we'll take this to right about there. Okay, so this here, if you're short right now, I would say is your initial target area. Right into this little spot here. Should we slide down into here, which would be good for you? You're short, obviously. I want to see you make some money on this trade. I would be cautious. This will probably be an area where you're going to start to see some consolidation just because you can see it over here back in October. So between this $1.18 to $1.19 area, if it just bounces off of this is going to probably be good support to where it's going to come back and make a challenge of these highs again. In which case, I would say make sure you're keeping your stops tight as you move forward over the next week or so. And then also, I do like your trade because the pound, if the lockdowns continue in the UK, which I don't see them not continuing, at least for a little bit longer, and we haven't seen what kind of on the economy. In the short run, I say it would be kind of obtuse to think that it's not going to have a negative impact and a drag on the UK. They are not as big nor as resilient or have the abilities to bounce out of things like, say, we can in the United States, or even the EU can absorb because they are bigger. It doesn't mean that they don't have things that they can do economically, but I would say you're probably going to see the pound continue to be under pressure with the Swiss too, because the Swiss and the U.S. dollar probably are not going to, like I said earlier, are not going to be as impacted as much as, say, the pound and the euro. So, yeah, I like your short here on the British pound Swiss going into the new week. You want to take a look at the hourly real quick? Let's see. Okay, so here we have the hourly. All right, so this is nice here. So you want to key off of this last high here at $1.2037, and we settled right where we need to get below. So this would be, I would say, the warming up range between here as far as on the hourly is concerned, and if we get below here, that would be a big deal. And if you look at this on the trend line basis, here's the trend. It's not that steep of a trend, but I could easily see that the pound Swiss taking out this area, testing this upward sloping support line, and especially if we can keep on pressuring support down to here. If you take out $1.1968, all bets are off on pound Swiss, which that would be good for your short. So there's some numbers for you. I hope you got something out of that. Any other questions on any other markets there, Jericho? You got any other positions on besides the pound Swiss? All right, let's go back to the daily. All right, so there's your target range there from $1.1901 down to $1.1846. It's not a bad little range there. If you look at it, if it takes, let's say, a week and a half to get down there, I would say maybe. You know, I mean, the thing about the pound with any currency and any currency cross with the pound, excuse me, there's always a decent range on most days, and when the pound kicks up, it typically is very, very low. There's a lot of potential, definitely to the short side. Just be careful. Like I said, anything above $1.2124 probably is not going to be in a good way. All right, so let's use US dollar JPY. All right, so we ended coming here by the US dollar yen. We are still right here. We settled above this big pivot right here, above this high. So we made a lower move low and a higher move high. This is not bullish, but what it is setting us up for maybe a challenge of this downward sloping resistance line, or at least a sideways to higher trade over the next few sessions into the next week. This has had a big bounce, as you can see how this one here accelerated. Look at how big, strong this rally was. It hung out for a couple days, and then it's been trending lower ever since. Is that going to be the case right now? Who knows? I do believe that as long as we can hold trading above $1 at 103.90 here, 104 even, that you're probably going to see this market drift sideways and try and make a challenge of this downward sloping yellow resistance line. Not much upside am I looking for, but like I said, I think in the short run, you have a good chance at going sideways to higher. We have the Australian dollar, US dollar here, which is just continues to hang under its highs. This thing is such a bull. Now, here's the thing about the Australian dollar. You're going to start to see, I think, in 2021, a major divergence in currencies, meaning that let's say we have a pound and euro sell-off because of the economies slowing down over in Europe. Okay, that would shake up that trade zone. That would be that would impact the dollar, would impact the Swiss, it would impact the pound and the euro. However, the Australian dollar, Australia and New Zealand are commodity countries. And right now, we have a big, you're welcome, Jericho. We have a very big rally going on in all of the physical commodities, meaning that you have coffee that's rallying, you have natural gas that is going up, gasoline is going up, oil is going up, wheat futures are going up, corn futures, soybean futures, live hogs, live cattle, gold, silver. Now gold had a little sell-off, so did silver, but if you look at copper prices right now, it's insane. Now, you got to realize that because Australia and New Zealand are commodity countries, meaning commodity driven, that's what their biggest export is. So that being said, this is impacting the Australian dollar because so much is done in Australian dollars when it comes to gold and what have you. So because gold is strong and because oil is strong, because all these different things are rallying, that means that Australian dollar has some credence to remain a bull versus the dollar. So I would be very careful of any sell-off in the Australian dollar, US dollar. It would be only if there would be big problems in Australia, such as with their economy or something like that. The slope of this rally is fairly steep. It could be a little bit more, a little lower of a slope would probably give it a better chance at being a nice strong bull for a longer period of time. But this thing can start to go sideways, bounce off of it, and just continue higher. Like, it looks like it's going to continue to do so. I would look, if you're going to buy this thing, I would wait for a slide and then wait for a buy signal. And I would really, really use caution trying to sell into this thing. The trend of this market has been swallowing up the bears for a while. I mean, you never had a chance to make money on the short side on this market except for a couple times in the past 2 months, like literally. So I'd be very, very cautious. The fact that it didn't make new highs on Friday and it's just kind of holding while the other ones seem to be more correcting, that just gives credence to the strength in the Australian dollar, US dollar. Let's see. Do you think copper will become worth more than silver? All right. You know what? That's a really good question. And why don't we take a look at that? So when you go on the Forex-Trading-Unlocked.com website, you go to markets and you go to, since that's a commodity and you want to look at the metals, we're going to go to commodities. Okay. So we're going to take a look at copper and silver real quick. These do have an impact on the currencies. So very, very good question. I like it when I get questions like this one. Okay, so here we have our metals chart. So we're going to take a look at copper real quick. All right, so we are pulling up the copper chart. Now, I don't know, Johnny Garber, if you're familiar with TFNN.com. They're my guys down in Florida. Every Wednesday I do a Forex spot for them. But the one head guy, Tommy O'Brien, he's a big gold guy and metal guy, and we've been talking about this copper rally already for months. You know, back already in October, where I was saying, you know, with gold and silver going, I'm like, and then with the industrial growth of potentially coming back online in 2021, we were looking at how copper, especially because of supply chain issues, could have some big rallies. Obviously, it has. So let's see what's going on here. So copper on the daily, let's go to the monthly. Now this is the futures. Okay, so this gives you an example of what kind of a move this thing has had just in the past couple of months. So back in March, in just 9 months, this copper has gone from just under, I mean, it had a low of 197.25, and now here it's at 367. Now let's pull up a silver. You want to know more than silver. Okay, now copper becoming more expensive than silver is going to be a little bit tough. Here's the main reason for it, is that silver, especially in kind of like the old school way of protecting yourself from risky environments. I know that the millennials are into buying Bitcoin, but gold and silver is still something that people buy. Silver obviously took a dump, as you can see. Now, here's the thing you have to look at. Okay, so silver, if you look at this, okay, so back around 2011, 2012, look, we had got all the way back up we were at $49. Now, silver tends to spike and eventually hits a point where it's not going to grow anymore. But you have the potential right now. Let's just say that silver went from where it is now up to these highs. You're looking at 24 to 48. So you're looking at literally a 100% return. So now let's look on a relative basis. Do I think that copper can become worth more than silver? Absolutely. Okay, so now here's what I mean. All right, so we take copper. Historically, especially going back in the last around 20 years, the high is up here at $4.50, something like that, just over $4.50. If you look at this long-term chart here, we've made consecutive longer-term higher highs and higher lows. This is super long-term. Okay, so if we're at 367 right now, to double would be at $7. And that is very, very reachable. Basically, because if you look at it from here, from this high to this low down here, if we were to project from this low up beyond this high in a super long term, you're looking at copper being up around between $5 and upwards of $7. Could that happen? Absolutely. It totally can happen. And I would say that, see, here's the thing is especially with all of the repairs that need to be done and to catching up on, remember, the United States and the EU have been in big lockdowns for, at least half a year for the most part. There's especially when schools start coming back online and what have you, buildings that haven't been used really properly are going to have all kinds of issues. You can't just let buildings go idle, let alone warehouses and what have you. So yeah, I think you're going to see a big jump and see copper around $7. So on a relative basis, yeah, do I see copper going to $50 an ounce? No, that would be extreme. And I think if copper's at $50 an ounce, you're going to see silver at $150 an ounce. But I think in a relative basis, you could probably see a higher return. Okay, Jack, let's see. One I asked because copper has become harder to get, especially since it's being used in EVs. Yeah, so now then there's a technology aspect. Here's the one problem I have with that one, though, is market's correct. The more expensive that copper becomes, and they're not going to just replace copper, but they may. Copper can't get more expensive than silver because you would start using silver, and even like a lot of gold alloys and stuff like that. So, like you still use in especially high-end components and technology and stuff like that, like satellites. They don't use copper in satellites unless it's, well, they do, but they use a lot more gold and platinum. So, but I do hear you with the EV technology. But remember, here's the thing is that whole industry is changing so radically that, now you're going to have cars that besides, being electric and charge, where you have charging stations either at your home and what have you, now they're going to be able to charge themselves with their own solar cells built into the carbon fiber bodies and stuff like that. Like, the technology is changing so rapidly that I think in the short run, yeah, the run on copper for technology looks like it's a big scare. But then it's also the cost. You got to remember is the more it costs to make something, the less people are going to buy. So there's kind of a caveat there that you have to be. There's a pinnacle point where you're going to have diminishing returns. So that's another thing too, is that you can't get ahead of yourself. All these things have to be made, delivered, and being in use. So, and that's another problem too. But I do like you being bullish overall. I think that your outlook with the technology idea is on the right side of this trade. But here's the thing is that's because of technology and construction, and that's where the demand is. And now this is where copper could become an issue, is you have coppers being mined. A lot of it comes out of South America, okay? With the plummeting dollar versus a lot of these South American countries, that is driving up the price of copper as well. So it's not just the fact that there's been a demand function. Like, this whole rally in copper right now that you're seeing isn't because of demand, and it's not because of technology. This is because of a move. That's what's going on here. The dollar's gotten beaten down so much. It's why coffee is going to become very expensive. Companies like Starbucks in the year ahead are looking to have a very, very, very tough time remaining as profitable as they are. That's why they have such a diverse menu, and also, have smoothies and don't just sell coffee anymore, because coffee itself is becoming more and more expensive for them, and there's no way to hedge themselves out of it, because it is what it is, So, all right, cool. So we got those questions answered. Back to the Australian dollar, which we were just talking about. So as you can see, it's hovering below the highs at 78.19, and like I said, it has to break out one way or the other. I think above it, you can't fight this bull. If you're long, I would say keep your stops below 76.43 here. Anything in this territory sets us up for sideways to lower. New Zealand dollar, US dollar is also looking a little bit like it wants to at least pause for the cause. This here actually is a sell signal. We have what is called a three inside down sell signal here. This is a 3 pattern sell signal. It's a high probable Japanese candlestick pattern. Let me write this down here so you can see it. 3 inside down sell signal. All right, so for the Asiatic trading zone, we do have one market with a sell signal, which is a 3 inside down sell signal. Where does this have us targeting? Well, initially it would be this upward sloping medium trend line, cutting the trend and holding it up, and is not that steep of a slope. So even if we were to fall through this, I think you would have something like this, where it's more like by attrition, by time, or just slightly falls through it and then it wraps back up and sweeps back up again. This is also in a similar situation like the Australian dollar is. I would be very cautious. Anything that takes out the high from Wednesday here, 73.19, anything above here, this thing is a bull. You cannot fade this thing. But right now, this has a short-term sell signal. Does that mean that the Australian dollar is going to go with it to the downside? Maybe, maybe not. I think that you got to still take this one on its own. New Zealand is not Australia and vice versa. They're in similar situations, but Australia, I think, is a little bit more reactionary to China and some other things, whereas New Zealand is not quite as heavy weighted on that. Gives them a little bit more leeway. And then I think also you got to realize that dollar strength, if it is coming into the market, probably would have more of an influence on the New Zealand dollar than it would on the Australian dollar, especially in the midst of a major commodity rally that's going on right now. All right, now let's go to the U.S. dollar, Canada, come to the United States, and now we'll see what's going on to the northern border and then the southern border. So U.S. dollar Canada had a little bit of a bounce, just like the other currencies, but pretty neutral to lower. This thing is a bear. It's been trending lower for a long time. It made lower move lows this week. Anything to the upside right now is considered a correction. This downward sloping resistance line, even if we get through it, I think it'll be more from sideways trading going into February than a rally. Only if we get above $1.2964 do I see this market even remotely going up to higher levels. All right, can I do the Nzd Jpy? Yeah, Johnny, I can totally do that. So we got the Canada. There's nothing really there, like I said, except for those pivots. So Nzd Jpy. All right, this one is for you, Johnny. Nzd Jpy. All right, this one is a major bull. Okay, so this is interesting because I'd like to know where you're living because you're trading cool crosses. Most people don't, definitely in the United States, don't talk about crosses like this. New Zealand dollar, Japanese yen here, you can see the strength. Now, this is kind of, you can see kind of why this trend is evolving this way and it is so strong. The New Zealand dollar is strong versus the dollar, okay? And the yen is strong versus the dollar overall as well. So it's normally you could look for weakness and strength there's a triangle of crosses. So in this case it would be the New Zealand dollar, the yen, and the U.S. dollar. But how do we find out New Zealand dollar JPY? Like how much of a bull is this thing? Okay, well the key to this one is to go and look at the NZD versus the euro. Okay, so we have strength in the New Zealand dollar versus the euro. It's been going lower, trending lower, but in the short run, it's been a bull over the past week and a half. So let's look at the New Zealand dollar versus the British pound. New Zealand dollar versus the pound, same thing. It's gaining strength. It's starting to look very strong. Now let's look at the New Zealand dollar versus the Australian dollar. And the reason we're breaking this down, oh, you're in Florida. Okay, Johnny, cool. So if you're in Florida, you might know those guys from TFNN.com. They're pretty popular down there. All right, now we have New Zealand dollar, Australian dollar. Now this is where it's pretty neutral. It's very, very neutral. It's kind of ironic how New Zealand dollar has been trending versus most currencies and swinging just like the Australian dollar, but against each other. So that's because they're pretty much locked in the same environment. They're both commodity countries. They're both often, well, not in the middle of nowhere, but I think you know what I mean. So, all right, so as far as here, this one doesn't give us any indication of strength. It just pretty much has it, but doesn't have it as being weak either. So then we go to New Zealand dollar versus the Canada. Remember, to Canada, they're very close to us. All right, so New Zealand dollar is being strong versus the Canada. So, okay, so let's look at these currencies, where the strength is and where the weakness is. So you like the New Zealand dollar, yen, okay? So as far as strength for the New Zealand dollar, that is there because any other major currencies, for the most part, it's very strong. So now we got to look at, let's go back to the US dollar JPY again, just to take a look at this to remind you where the strength is and where the weakness is. So US dollar yen, and this is on a monthly, okay, on the daily. Here we go. So here we have the strength here in the US dollar and the yen. Now let's just do JPY over euro. We're just setting the cross to find the strength and the weakness. So the yen is strong versus the dollar, and the yen is weak versus the euro. Okay, so that means that the yen isn't necessarily, I mean, it's a flight to quality currency, but it doesn't mean that it's a totally strong bull. So if the yen is weak versus the euro, and the New Zealand dollar is strong versus the euro, remember? So New Zealand dollar, euro. So once again, if the New Zealand dollar, or if the yen is weak versus the New Zealand dollar, and then we have New Zealand dollar strong versus the euro, if the yen is weaker versus New Zealand is stronger than the euro, then the New Zealand dollar, JPY, will probably continue its trend. So I would say that you're seeing it spike here. I would be careful about selling into this. I think that's probably what you're looking to do, is to short it. The strength is in this market, so I would look to buy a dip. If anything, probably look for, let's see, find the 50% here between, oops. Why am I not getting... Running a little slow here. Okay, there we go. So just eyeballing it really quick. Yeah, okay. There we go. So yeah, down in the 74, 171 area. This would be a good little correction. So if you're short, I would say this would be a nice short-term target to the downside. This here, this low, would be your key breakout level to the downside. If we take this out, that's a lower move low after a lower move high and a big spike. Markets go out like they come in. This is a pretty strong rally. I could see it at least correcting into this area. So, let's see, maybe, let's see. Yeah, there's no, I mean, longer term. I guess we could go down to here and see what you would get. Well, yeah, see, this area comes right into a 0.236 area. And this low here, this critical low here, is right around a 0.382. So harmonically, yeah, you could see the market get back down into this. If it took out this area, back down to 72. I don't think it would get below 71. But yeah, I think right now I'd be very cautious being a bear here with this New Zealand dollar yen. You might see a couple-day break, but I don't think it's going to last for very long, at least from what we looked at. Remember, the best indicator for any market is the market. So looking at those crosses, the strength seems to be in the New Zealand dollar versus the yen. So now, if all of a sudden there's a major move in the yen, and here's the thing is, the Japanese aren't exactly making waves when it comes to the world of finance the past year. They're very stable. They're trying to ride the coronavirus thing and trying to just get output back online and have people, buying stuff because that's what they need. They're an island, So, and it'll be interesting to see how things pan out. The good thing is they're stable. They're probably one of the most stable currencies out there. So the trend, like I said, is pretty reliable, and that's what I would stick with right now. Okay, so I think we got that one. Now let's go back to US dollar, Mexican peso. So for one last little thing we're going to look at here, we're going to look at the US dollar, Mexican peso. We had a big buy signal on Thursday. We had a bullish engulfing line. So this thing has been beaten down for months. I would not try and catch a falling knife. I think that you're going to see a short-term bottom here. Now here's the reason why. I'm going to go with, besides the fact that this is a bullish, and oops, forgot a letter here, the letter B, all right, and engulfing line. And this is a buy signal. All right. So here we go. All right. So why would the U.S. dollar Mexican peso maybe start to bottom right now? Well, what if spring break doesn't happen? I'm just saying. Okay. Is there traveling to Mexico? Yeah, there's traveling to Mexico. Is it going to stay? Well, they may not allow us to come into the country. It depends. It depends on how coronavirus grows, especially with the new strain. And I think that you're going to have to see wave two because that's just what's going to happen no matter what. Doesn't matter what your take is on the situation or how the world is going to handle it, but lockdowns are. So, and if that's the case, it's going to be very hard for the U.S. dollar Mexican peso to stay where it's at, meaning that while everything was looking like travel was going to open up and what have you, the peso went from, up at around 24, 23 pesos back down to 20 pesos and bobbling around in this area because everyone's like, oh, people are going to Mexico. They're going there for Christmas. People are traveling. Well, yeah, but how much? Not very many. And the question is how many college kids are going to be traveling to Mexico for spring break? To pay for it on their own? Yeah, the ones who have to wait for mommy and daddy to pay for it, well, there's probably going to be all kinds of issues with that, I'm sure. So I think that could be the spike. Then we're going to have to see how this is going to be with the dollar. I think we'll find out over the next week or two, once the election has been completely done and we have a new president in the United States, then we will see whether or not what kind of lockdown measures are going to be imposed. Should they be what they've already stated, you're going to have a 150-day mandatory federal mask ruling and lockdowns on a bunch of businesses and restrictions. If those things are closed, people don't have jobs, people don't have money to travel to Mexico. It's just that simple. So, and they rely on the U.S. tourism and U.S. dollars. So with that being said, I think you're going to probably see the Mexican peso continue to grind its way higher, back up to like 22 to upwards of 22 and a half pesos to the dollar. So if you were planning a vacation, the good thing is you'll probably be able to buy your pesos at a better price in the next month, 2 months, as we get towards spring break time. So for those of you who are going to go, I think you're going to arguably get a cheaper rate on your trip and be able to pay for more with less money because of the conversion of the dollar and the Mexican peso. This would also kind of have to mean that there's a little bit of a dollar rally, which the dollar has been beaten up so much as we make a changeover into the new president, and especially since we went over this with the metals and also the interest rates, that we are going to probably see more buying of dollars just because of and as we move into the next month or two. Are there Chinese currencies on Forex? Well, there is the yuan and the Hong Kong dollar. So, in fact, if you go to our website, forex-trading-unlocked.com, when you go to, oops, not this one. Wait, we got one already pulled up. So let's go to here. Okay, so we go to here. All right, so we go to markets again, and then you go to the Forex thing. And we'll just skip over this ad. Okay. So this Forex page here has all the markets where you can just click on the different currency crosses versus each other. You just got to toggle down. So for Hong Kong dollar and the Chinese yuan, we have these. So as you can see, the US dollar, Chinese yuan has been in a free fall. We'll get rid of that and make it a little easier to see. So this is the Chinese, and then we also have the Hong Kong dollar. Okay, Hong Kong dollar. It's loading up. Now, as far as can you trade these? Absolutely. I don't know what broker you have, and so there's limitations. I know that there's no futures on it. It would only be in the cash in the FX market. As you can see, a lot of volatility in the Hong Kong dollar here. Very, very, very spiky. So I would be very cautious trading this one, that's for sure. And then here's the other thing too: is when it comes to Chinese currencies, they fixed they're not free floating currencies, and they are what they basically say they are. So and that's a whole nother story of whatever. Here's interesting to look at, though. Look at obviously the Chinese yuan and also the Hong Kong dollar are radically different. I mean, the Chinese yuan has a much more stable trading over the days and months than does the Hong Kong dollar. But then remember, Hong Kong has been in complete chaos for a year, so that could probably have something to do with it. But let's look at the monthly, just to get an idea of strength and weakness. U.S. dollar, Hong Kong dollar, you can see. All right, so just in 2020 alone, we dropped huge. That was just monstrous, this drop in value. So, and here's the irony of it all is that because of this big drop like this and this big drop like this, all the goods from China become more expensive. Isn't that great? So the Chinese aren't exactly, I'm sure, liking the fact that the U.S. dollar is tanking right now, or has been for months, and that their currencies have been relatively super strong versus ours, because that means that while they had, I wouldn't say trade restrictions, but now that there's fairer tariffs on Chinese goods, with the compilation of a weak U.S. dollar, that means that everything from China's gotten super expensive. How about that one? Huh? Pretty interesting. So we'll see how this impacts the currencies as we move into 2021. It was nice to actually get some good questions like that, Johnny Garb. Thank you very much. So, but yeah, the Chinese currencies, as you can see, they've been overwhelming the dollar as well. And who knows, maybe we're starting to find, I mean, this is a big drop, so I don't know. Who knows, maybe we're going to start to see a rally unfold. Remember that currencies trend, and we do have a new president coming in, well, I guess supposedly 11 days. We'll find out. So New Zealand dollar, JPY, we looked at that. Let's go back to the euro US dollar just to end and remind you that we do have the one sell signal here, bearish engulfing line, and this is going to be a key one. If the dollar index is going to get a bounce, and this is what we didn't even look at, let's just do this on an end note, it's going to be because of a turn in the euro and the pound. And then the one thing we have going on here is that in the dollar index, we have a bullish engulfing line. All right. So, does that mean we're going to have a big bounce in the U.S. dollar? Who the hell knows? No, but no, I think we are going to have a nice correction that's going to probably follow through for the next, I would say, half a week to a week. And like I said, it's a correction. So that's all that we are looking for right now. It could be the very bottom of the dollar for the next 2 years for all we know. But right now, it is just the start of a. You'll see how bullish this dollar can become, or whether or not we just can get, who knows, maybe it's profit taking. You know, you got to realize you got all these markets are overheated already. I mean, and we're just into the first, we're heading into the second trading week of the year. So we'll see how things go. Let's see. With that, I'm just going to remind you real quick once again that if you haven't subscribed to our YouTube channel, to do that, please, and pass it on to your friends, and check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And for those of you that are still listening, Johnny Garb, this is you, and maybe Jericho, if you want to check out this book for free, starting on Wednesday the 13th through the 17th for 5 days, you can get the Kindle version for free to use for a month. So you'll be able to check out the book and read it if you want. It doesn't cost you a